Hey guys, it's me, Nicolette Mashile, also known as The Financial Bunny. Welcome to The Financial Bunny TV. I feel like I haven't done this in a long time, but I promise guys, I'm not neglecting YouTube. I've just got to get around the bend with writing the next book. You guys know that sometimes as writers, we just hit a blank. And I think for the last couple of months, I had just hit a huge blank. And right now, I'm in the creative space and ideas are coming and things are coming. And I'm like, yes, I'm writing. In fact, I even wrote 4 kiddies books in the last 2 weeks. So I'm quite impressed with that, and hopefully I'll finish the book, the second book for adults, and we will have it early next year. So that I'm really excited about it. I even started getting some of the chapters edited, so I'm really, really excited about that. So anyway, let's just put it out there. Everything that I say on this video does not constitute as financial advice. If you are looking for financial advice, please speak to somebody that is certified and registered with the FSCA. So let's get into it. Y'all know I cannot hide nothing from you. And you know that on a daily basis, guys, when I wake up in the morning, the first thing I do is I sit on YouTube and I'm looking for ways to make money online, ways to make money through my home loan, ways to make money through this. But what I did not bargain for was what happened on Wednesday. So on Wednesday, I have this client who is in the United States of America. Yes, our reach is that far. I'm just joking. He's really from South Africa, but he's living in America, which, by the way, is quite deep, eh? Living in New York. Hey, when the dollar is currently sitting where it's sitting. Cost of living. We're struggling here in South Africa. This gent is there in America living, okay? So anyway, he's in America, and he was explaining to me this concept, and it's called, he said it's infinity banking. It's actually infinite banking, right? So basically, guys, my mind was blown because, you know me, I don't want to not know now. I'm not the type of person, I'll admit to not knowing something. I'll say to you, I don't know. But while I'm saying I don't know, I'm there Googling. Literally, I'm Googling. So while we were in this conversation, I started Googling. Then I was like, okay, wait, let me finish the session. But we're at the tail end of the session. So finished my session with him, went straight into Google to Google this thing called infinite banking. It actually reminded me of another conversation while I was talking about it. So, you know, what's his name? Simon Sinek. Simon Sinek is the guy that wrote Leaders Eat Last. He is absolutely fantastic as a motivational speaker, but he's also a great expert in terms of human behavior, especially in the workspaces. And he's quite I would say a behavioral expert on a lot of things, and he really can get your organization to where you want it to get to. So one of the things that he spoke about, he's got this concept about Microsoft and Apple. So he tells a story about how he once was invited to speak at a Microsoft event, right? So he's speaking at this Microsoft event, and I think they were launching one of their products that was going to rival the iPod at the time, when obviously the iPod was Apple's biggest product. So he speaks at this event, and then obviously because it's part of the program, he gets to sit down and listen to other speakers. And other speakers from Microsoft were talking about how it's better than the Apple, the Apple iPod. This is how the features are better than the Apple iPod, and what. And from his observation, it was a far better product than the Apple iPod, right? So by some coincidence, he ends up in an Uber with the guys or the executives from Apple on his way back to where his home is. And while he's in the Uber, obviously he knows them because he's obviously interacted with them because he's done events with them. While he's in the Uber, he says to them, I just did a Microsoft event. And let me tell you, those G's that side have a far better product than you guys. And he was shocked at the response. Well, when he narrates the story, he says, I was shocked at the response because the response was, of course it's better. Of course it's better. But the difference between us and Microsoft is that they're competing against us when we're competing against ourselves. So it's playing infinite and finite games. So he talks about finite games basically are games that have an end. So it's like a soccer match. A soccer match ends at 90 minutes. But infinite, I don't know, what's the English word? How do you pronounce that word? Like, y'all know I'm Zulu speaking, Tsonga, Zulu, Xhosa. yonke into mix masala, Swahili, diyazithetha zizonke kaloku, bakuhamba chivenda, all of it together. So English is not my top priority, so I don't care. And so infinite games, I'm going to call them infinite games right now. Infinite games are basically games that don't have a determined or predetermined end. So when you are in business or when you're working on your own personal goals, it is important to have infinite goals. These are goals that are not determined by a scoring. And the problem is that because we compare ourselves to other people, we often put a benchmark of a scoring. Whereas if you're competing against self, it's about being better than yesterday. So you keep going. So there's no end goal. There's no destination. There's no end journey. You just keep going and you become better for self. You become better for the organization. The organization can morph into whatever it wants, because when the organization, for instance, realizes that we are thriving now on culture. Our culture in the organization is doing really well. They pump money into culture. When the organization realizes actually our product development is absolutely outstanding, they pump money into product development. Whereas if you're playing a finite game, you know the goal is to score goals in a game of football, for instance. You gotta score goals. So even if you can recognize that actually our scoring of goals is not good, but our midfield is really good, you can't even add more resources to your midfield because the game ends. And the goal of the game is to score as many goals. So this is what this infinite banking kind of reminded me of as I was reading about it. And basically, it's about becoming your own bank. So basically, you become your own bank. So you duplicate the bank's business model. So banks obviously collect our deposits when we put money. By the way, your money is not at the bank. Like I think many of us, it's so weird. We think our money, I have 50,000, it's sitting in the bank somewhere in a little vault. Unless you got gold bars and you put them in a bank's vault, your 50,000 is just simply a ledger entry. It's on a ledger to say, yes, Nicolette put in 50,000. And if it is in a deposit account that's going to be interest bearing, we've promised her 7.5%, but we must minus 3% for fees. So that's basically what it is, right? So you can't go there and say, can't born 50,000, can I see my 50,000? Stacks on stacks on stacks on stacks on my 50,000. That's not how it works. So basically, because they have promised you, because you have put in your money, they then take your money and borrow Spongile, and Spongile has bad credit. I'm just joking. But they take your money, basically, your money, and they borrow Spongile at a certain rate, right? Obviously, that's like the basic explanation of the banking model, right? But the other explanation is if you use a home loan, for instance, when you take out a home loan, you promise to pay back their money, but you also promise back interest because you owe them. And the collateral that you are giving them is the actual asset, which is the home loan. That's why you will see that home loans, car loans, they will have less interest charged on them because there's an actual asset that is backing them up, that is standing as collateral. If you default, they fetch the asset. Whereas if you're dealing with credit cards, overdrafts, revolving loans, and what, there's none of that. There is simply the interest rate and it's hiked up. So there's a credit card interest rate, then there's the bank's rate, and then there is, of course, the prime lending rate, and they land you somewhere where they feel you should be landing based on your affordability, credit status, and of course, just other guides that they've got based on the product and what the business unit is trying to do in the bank. Sometimes it's, we always tell people it's about affordability and credit status, and I think that's really to just get people to understand. But we know that a whole lot more goes into it. The Bank A sometimes prioritizes car loans, and they will push out and be lenient on car loans. Bank B may prioritize credit cards. Bank C may prioritize home loans. We know how these things work, right? Anyway, so with this infinite banking, you become your own bank. But you need a product that is going to stand as your collateral. So what happens is then you tap into another financial industry, and that's the insurance industry, right? Insurance, how does insurance work? Insurance collects your premiums, right? They collect premiums from as many people as possible. So they gotta get a lot of premiums or a lot of contracts with people insured so they can collect premiums. Then they take those premiums and they reinvest them somewhere where they can get a good return. And with all of the money that they are getting, they use their money obviously to pay back claims, but also to pay their staff, operational costs, and all sorts of costs, reserves, contingencies, and all of the things that they're going to do. They do need to keep a huge chunk of reserves because obviously they're an insurance company. So we got to now use the insurance company or an insurance product. So the product that is now used in this infinite banking is called whole life insurance. Now, obviously, your sister threw a rabbit hole because now I'm like, oh, whole life insurance. Can I get whole life insurance in South Africa? Is it even something that I can get? Can I do infinite banking? And of course, call, literally, same night, Adele Barnard. She's my go-to person for finance. Adele, infinite banking. Do you know what infinite banking is? Do we have whole life insurance in South Africa? Can I withdraw from it? Because basically, for you to become your own bank, you need to get a whole life insurance policy that has two parts. The one part is your insurance part. So let's call it your insured part. And the other part is your investment part or your cash value part. And basically, your premium is broken down, and a portion of your premium goes to your actual insurance, and the other premium goes to your savings or your investment base. Let's rather call it investment. Then you need to build up this investment, right? This investment part. So you build up your investment part, but while you're building up your investment part, because it's a portion of your premium, it means the other premium portion of the premium is still going to your insurance. So let's say you're insured for 3 million rand, but you building that investment part. Let's say you build it up to 500,000, but now you want to borrow. So you borrow against your investment. However, so when you borrow, you withdraw, right, from your investment. So as you are invested, you are collecting dividends, reinvesting into that pot again. As you actually collect or take a loan out there, you use the asset that you've got, which is the insured pot, as your collateral. So basically, you can pay yourself back. Like, it's absolutely insane. So, of course, as I said, I hit up my financial advisor, Adele Barnard, and I said, sweetie, you got to tell me. So the next morning, we're on a call, me and her jumping on a call, trying to understand, is this thing possible in South Africa? She says, no, look, in South Africa, we've got things like wealth bonus and what, and, it's not really like that, what they do. And I think it's done in America, Canada, I think you can also do it. But she says she's going to find out. And she's going to talk to an actuary. I think it's a product specialist or actuary in one of the insurance companies, and she's going to come back to me. So when she comes back to me, I'm going to come back to y'all and tell y'all if it's possible, because I'm just sitting here and I'm like, there's something in that insurance space that we can use to build wealth. I mean, life insurance from a basic. Life insurance in South Africa has really focused quite a lot on the death benefit, right? So you take out life insurance of 5 million rand, you die, and it pays 5 million rand to your beneficiaries. Of course, if you have comprehensive life insurance, it will pay out an accelerated funeral amount to bury you, and then life insurance will pay out at a later stage, right? So there's two types of life insurance in South Africa broadly. There's what's called whole life insurance and what is called term life insurance. Whole life insurance covers you for all of your life. So as long as you are still alive, it will cover you, right? Up until you die, then it will pay out the death benefit. Term insurance usually is used for people who want lower premiums and also want to cover, like, for instance, a bond. So you take out term insurance for like 20 years because your bond is 20 years. So when the bond lapses and the 20 years is gone, the insurance also ceases to exist. So those are the two broad differences. But I'm just thinking about it, and I'm like, imagine if you can build up an estate that has a lot of equity. You borrow against that equity. You build a whole lot of wealth of buying other assets using the borrowing from the equity that you've already built on your own. Then you take out life insurance. When you die, the life insurance benefit pays out. So you take out whole life insurance so that there's a guaranteed payment. It pays out, you settle your debts, and your children can actually carry on with the asset that you've bought using borrowed funds from the equity that you've built, that you essentially assured on your death or upon your death with a life insurance policy. I don't know. There's something there. Let's discuss for 10 months. You tell me, because I feel like There's definitely something there. But when I do find out, guys, I even wrote a whole chapter about it in my book. But on Salprat. Remember, nothing I say in this video constitutes financial advice. If you are looking for financial advice, please speak to somebody that is certified and registered with the FSC. I'll see you on the next one.